Jake?
You are good to go, Marianne.
Okay, awesome. Okay, good morning, everyone, and welcome to the Earning Curve. We are so happy to have you with us today. We've got a great program. The Earning Curve, if you don't know, if you've never attended before, it's a new panel series, and the audience drives all the questions. So send your questions up through chat. There's a thought bubble icon at the bottom of the screen. Just type your questions in there, and we'll get them answered for you. Today, we're talking about financial end-of-the-year to-do list. So let's get everything in order. In order to do this, we are going to start with our introductions here. Just get the ball rolling because we're a couple minutes late. I want to introduce first our anchor panelist, Jennifer Bardot, my good friend, and she's the AVP over at Enterprise Bank and Trust. Jennifer is amazing with her enthusiasm and energy. She works super hard for her customers, and she makes you feel like you are the main priority every time you call. She loves the outdoors. She's avid with water sports, camping. She's a great carpenter. In a matter of a few hours, she can construct like a tree house for her kids. It's always impressive. And Mark O'Donnell is our next panelist, and he has spent his career serving small businesses in manufacturing, construction, distribution, and a variety of B2B professional services companies. His technical background is in public accounting, and I've personally known Mark for 22 years. I began working for him right out of college. He's a very obsessed road cyclist, and he enjoys spending his time biking in the hills of Wildwood. Next up, we have Jacob Hershend. Jacob is the VP of Risk Management. He's a consultant at Marsh & McLennan. Jacob is an expert in multi-generational family-owned business strategies. He lives in the Central West End with his wife, Jessica, and their 4 young children. And a fun fact about Jacob, he's not a big fan of roller coasters. He says it's too risky. Next up, we have Keith Goldschman. He is the retirement plan consultant at Enterprise Bank and Trust. Keith is an expert in 401ks and dedicated to his work on retirement plans. Keith was on the Travel Channel once. This is a little fun fact, but not for the reasons you'd want to be on the Travel Channel. So a group of friends went on a trip over New Year's, and the trip was flying into Miami and driving to an RV park in Key West. So Keith evidently managed to get the RV air conditioning unit wedged into the parking garage roof and got stuck, and at the same time, the Travel Channel was filming a show in Miami, and they documented the whole thing. We also have Stephanie Martinez with us today. She's an attorney and the founder of the Estate Planner, LLC. The Estate Planner is a law firm dedicated to helping people protect themselves and their loved ones. Stephanie is the treasurer of the St. Louis chapter of Financial Service Providers, and she serves on the board of Laumeier Sculpture Park. Stephanie's a mom of 3 boys and 1 puppy, and she practices jiu-jitsu, and she's a Masters world champion and Pan American champion in her division age group. Okay, let's go ahead and get started. Jennifer, let's start with you as you're our anchor panelist today. What is the importance of having a financial to-do list? This is just such a crazy year. Do we all need to consult with our accountants, financial advisors, bankers, and all that before the end of the year?
I would say definitely. I said that's actually why you build out your team of trusted advisors, because boosting your financial health is essential for the longevity of a business. So I would say definitely, consult with the professionals within your team of trusted advisors that you trust. Look for opportunities to take advantage of tax credit incentives. Look at opportunities to take advantage of sweep accounts. Maximize any insufficiencies that you might not see, and that's why having other sets of eyes on your financials is really key. So yeah, definitely trust your financial advisors as well as your CPA or whoever you trust as far as your board of directors.
Perfect. Thanks, Jennifer. So we have a couple questions here in chat. Let's see. The first one is for Mark and then Stephanie as well. Mark, what is your number 1 to-do action for the balance of 2020? To-do action item. You might need to unmute. Mark, I think you need to unmute.
I'm not a professional panelist, obviously.
We're all scrambling today. Don't worry. I had technical issues. Okay.
Yeah, and my number one to-do action item for the balance of 220 is kind of a blend of two things. First of all, I think it's extremely important. And secondly, I think it's somewhat undercovered by the press. And that's you need to be reviewing your wills, your trusts, your estate plan, and your succession plan. I know those are all intertwined. And it's very important because, well, very timely notice, the president came down with COVID. There's a chance that you will come down with COVID, and you'll either have a lengthy absence from your business, it could disable or kill you, a family member, or a potential owner management successor of your business. I think it's time to pull out those documents, especially if you haven't done it recently. That would be your will and trust, your estate plan, and your succession plan. Those may well be 4 separate documents. And take a good look at them. You're going to want to consider how COVID has changed life and how that might be reflected in your documents and whether or not those documents have changed. One thing, of course, always look for assets you haven't retitled into your trust, which is a constant problem. But these documents are more than just a few years old. I strongly recommend going to see your estate and trust lawyer, visiting with your CPA, and for the latter item, the succession plan, go over it with your management team as appropriate. Make these changes and make them soon. None of us know when we'll get sick or if we'll get sick. But again, it happened to the President of the United States. He has the benefit of immediate comprehensive health care. I don't know that all of us would get the same treatment. But I'm going to guess that Stephanie can add to these comments. So I will quickly hand it off to her.
Mark, thank you. It's such an important point that we review our estate plans. And, not only, Mark's exactly right, COVID certainly affects the way we look at longevity, the way we look at planning for incapacity, the way we look at our existing estate planning documents and our succession plans. The other thing is, besides COVID, 2020 has been a watershed year in terms of legal changes. So you've got the Secure Act greatly changing the way retirement accounts are viewed, especially inherited retirement accounts. We've got the CARES Act, so much going on that changed the way you handle whether you had to take mandatory distributions, whether you can take early distributions, definitely issues to talk to your accountant about and your business advisor about. And then we've also got an election coming up, of course, as everybody, you can't get away from that, everybody knows, but there's potential for great change in the estate tax planning laws. And you should be talking to your estate planning attorney not only about your existing documents, but whether you need some new documents to take advantage of our very high estate tax exemption. So right now, you've got $11.58 million for a single person that you can use. And you're not going to get taxed. If you pass on that amount, or if you're married, you pass on almost $23 million, none of that's going to be taxed. But that could very well go down with the administration to $3.5 million or $7 million. And you're looking at a 40% tax on anything above that. There's all kinds of planning that can be done to help escape some of the tax consequences of those provisions, but it needs to be done perhaps this year. So lots of things to think about as we look at estate planning, tax issues, business issues.
Thank you, Stephanie. Sorry, I had to unmute over there. Okay, next question up in the chat. So this is for Mark and Jennifer. Since no one knows if and when Congress will pass additional legislation to support small business, or how long the recession will last, other than making the most of cash management, what do you suggest to help me in the face of uncertainty with COVID? So Mark O'Donnell, do you want to start, and we'll pass it to Jennifer?
Sure. So probably the thing to do there, and I would assume all of you do some form of year-end planning, at least for tax purposes. I would suggest this year you expand that to year-end tax planning for financial statements as well as tax planning. Now, even though that's a normal process for many, I think what's really strange about this year is none of us have very good visibility into, well, heck, December, much less next spring. So this year I think you need to have a couple of different scenarios where you have maybe what you'd expect, which might well be the good scenario, and then maybe a not so good version, and then an awful version. And then kind of run the numbers out so you can see where your financial statements would be at, say, December 31st, a very important time, and where your taxable income would be if they're substantially different. Doubling back on the financial statement, there's, for calendar year-end companies, there's one date that's very, very important, and that's December 31st for a balance sheet. Seems like whenever we go to get a loan or whenever we have to send somebody our numbers, they're not interested in our balance sheet as of October or February. They're always interested in our year-end. So some planning about how that balance sheet looks, how you can make it look stronger by some action between now and then will really pay off by the perception of, if you will, reduced risk. A lot of us in the financial world look at your balance sheet as a way to reduce how much risk is in your business. There's a lot of other components to that, but this is one that, at least to some extent, is controllable by the owner. Now, granted, bringing down your accounts receivable, trying to reduce your debt, trying to hold inventory at reasonable but minimal levels is a difficult thing to do, but I promise you it's much easier to do starting now in early October than it will be starting in early December. So financial statement planning, just by its nature, takes longer typically than income tax planning, which frankly and traditionally we've done in late November and early December. And again, this is a much larger effort than I think you find traditionally, focused on financial statements and tax returns. But there's so much uncertainty. We don't know whether we're going to get another round of support from the government or not. We don't know how deep this recession will get before it turns around. And my goodness, we can't get any straight talk out of the press, and even some of the financial channels seem to contradict each other. So that would be my recommendation. Start planning your year-end early and use multiple scenarios.
Yeah, and true. I echo everything that Mark had mentioned. And I just think the key is being transparent with your banker, your trusted advisor, so there are no surprises. So then we will have the capabilities to enhance your line of credit before it's too late. So I think the key is being transparent, having those conversations with your banker and your team to look at future problems when you're exploring different scenarios, and to do a comprehensive financial analysis, I also feel is key, because then you can identify those insufficiencies and look for alternatives to prevent fraud or prevent, loss of cash flow. So just to expand on what Mark said, I just feel like transparency and no surprises right now is really key for your trusted advisors.
Awesome. Thanks, guys. We've got another question up here in chat, and I believe this is probably for Mark, the accountant. Are donations to nonprofits 100% deductible this year? And do we plan differently if Biden wins the presidency? Capital gains, individual tax rates are expected to increase.
Well, the first of those two is the easiest. So to be clear, donations to 501c3 charitable organizations are deductible. There are some rather narrow deductibility for other types of not-for-profits. But keep in mind, it's a 501c3. Often a 501c6, which is like a fraternal organization, will ask for donations. Sometimes it's not clear that those donations are not deductible. So keep a heads up about that. And are they 100% deductible? Well, that's a little trickier question, right? And let's assume we're talking the individual level. Yes, they're deductible, but they only have an impact if you exceed the standard deduction. So if you don't have enough total itemized deductions to get over the, if you will, the hurdle, then for all practical purposes, whether you make donations or not will not have an impact on your income tax. Probably the biggest single thing to watch there, and the thing that takes most people out of itemizing deductions, is a limitation on state and local tax. In the past many, many years, all of us, especially those who are in pass-through organizations like S Corps and partnerships, we would inherit income from our businesses and then, as a result, pay a large amount of state income tax. Well, now it's capped at $10,000, and that has taken a lot of people, especially those who don't have mortgage interest, out of itemizing deductions. So the answer is maybe, as is true of all things tax, and you have to clear the itemized deduction floor. So do we plan differently if Biden wins the presidency? You know, I think generally speaking, without regard to who wins the presidency, in a bit longer term, more than just the next 4 years, we can look forward to tax increases. The government has just spent a tremendous amount of money, which honestly, even before COVID, we were running ridiculous deficits. So with the baby boomers all moving into Social Security, the government's going to need to raise money. The only way they can do that is taxation. I think you can count on higher income tax to start with. From what I've read, and honestly, it's all scuttlebutt, because what politicians say before the election and what they say after the election can be dramatically different. But yes, I would expect capital gains to go up if the Democrats win all the both House, Senate, and presidency.
Okay, thanks. We've got another one here. Let's see, this is for Jacob. Jacob, what are a couple of reasons why I would want to do a risk review? What type of risk review would you suggest?
Well, I mean, the most important risk review right now, kind of looking at 2020 and going into 2021, is basically what I would call just a whole business audit review of the current policies that you have. And that would literally mean that we would look through all of your current programs. So your property casualty, which would include your property, your umbrella, your general liability, your cyber, and also your auto. And then also the other lines of coverage as well, because now I think Mark actually probably could talk about this a lot more, is that banks, and so could Jennifer, banks and estate planners are looking to make sure that you have the right kind of coverage in place, especially when it comes to directors and officers insurance and EPLI, employee practices liability insurance, which is in 2019 and 2020 has been the Me Too world. So making sure that you have the right kind of coverage put in place to take care of those issues if there's ever kind of rose up. One of the great things about working at Marsh & McLennan Agencies MMA is that we are the largest buyer of insurance for companies around the globe. And so what that means is that we get preferred wording and language in those on those policies. So that means that when we're looking at a cyber program, looking at an auto program, we can make sure that the language in there is more applicable to the owner of the company rather than the carriers saying this is what we want to have given to you. So we can actually help word those the right way. We just did this, a cyber review, we just did this for a very large law firm just last week who have had a 30-year relationship with their broker, and they thought, hey, we're in a really good spot. I said, hey, it's end of 2020, let's go and look at 2021. Let's just sit down and walk through the policy. We're not asking you to take over the policy, we just walk through it. And when we did that, we found a little over 20 items that we could enhance for little to no premium increase based on some of their cyber components that they need to make sure they had. And plus we had a suite of services and languages that we could add on because we're part of MMA that this carrier knew that we could add on for no dollars added. And so we were able to take over the program, but primarily because we took it over, we were able to do it and enhance it the right way. And that's the thing that we're concerned about, is making sure that folks are being taken care of the right way when it comes to coverage.
Awesome. Thank you, Jacob. We've got a question here for Keith as well. In terms of 401ks, what should I be doing if I'm thinking about offering a new 401k to my employees? Can you talk a little bit about that?
Yeah, absolutely. So one of the things that we saw, we talked a little bit about the CARES Act and the Secure Act, but there was some really important new legislation specifically in the Secure Act around the deductibility of 401ks. So specifically for new 401ks, basically if you're starting a new 401k plan, the tax, so the deductible 401k plan increases. They're also allowing an extra $500 tax credit if you include automatic enrollment, which basically automatic enrollment works really well for the same reasons that opting in works so poorly. Automatic enrollment means if you're an employee in the plan or at the company, you just automatically get dropped into the 401k plan. It works really, really well. But one of the other things I tell people that are considering a new 401k plan is take a look at simple IRAs as well. Simple IRAs are often a much less expensive way to sort of offer a retirement plan benefit to your participants without having to sort of jump in with both feet to the 401k plan. So simple IRAs and even SEPs can be really good for folks that, very, very small companies, 1, 2, 3 employees. But look at simple IRAs, look at 401k. 401k tends to be the most expensive. It also offers the most flexibility, most amount of deferrals. But simple IRAs are a good option for people too.
Awesome, thank you. Okay, we've got another question here in the chat. Do we need to look at any additional insurance in view of COVID-19 related to sickness, death, resulting in exposure at the workplace? What precautions do employers need to take to avoid liability and litigation? This is to all panelists, so whoever wants to start, go for it.
Well, I can jump in kind of quickly on this one. One of the biggest things right now, I mean, we're majority of us from the Midwest on this call, and so one of the things that we kind of talk about a lot is that we like to think that we take care of each other as family. And when we're talking about COVID and being precautious for our I would call them team members, family members that are with the family business, is making sure that they have long-term disability coverage put in place, because if there is an issue in which they are sick for a longer period of time, they need to make sure that those folks have that peace of mind there. Also looking at it from a benefit side standpoint, making sure that there is if heaven forbid there is a death that happens, making sure that there is coverage put in place for funeral expenses and life insurance possibly. And a lot of those issues can be handled for minimal dollars, and those are usually considered voluntary lines where you can offer those, or you can also take care of them if you're the business owner. Those are I call them kind of like putting your heart in your hand and helping those people around you kind of coverage, put those pieces in place. When it comes to making sure you have coverage, additional coverage, the biggest thing you do is communicate. And I think I can put something in the chat box over here where we actually have a website devoted to COVID-19 pieces that could be put in place, as far as making sure you have hand washing stations, making sure you keep social distancing up to a certain feet. Those are the pieces that those are always going to be the most important pieces, making sure that people feel safe and secure when they're at work, and also making sure they're safe and secure if they're working from home, making sure their insurance on their home internet is secure. But and then as far as business interruption goes, for folks that are, if there is a COVID-related outbreak at a business, there is business-related insurance for that. But there is no business-related insurance for shutting your business down because the government says you have to be shut down, if that makes sense. So those are my, I guess, four pieces that I would say there. And I'm happy to chat with anybody anytime to do that. And I'll also add that on the link.
Thank you, Jacob. Okay, so we've got another one here for Stephanie. Let's see. Stephanie, how can I get started with an estate plan if I don't have one? What do I need to consider?
So that's a really good question. And as Mark mentioned too, it is time to start really thinking about our estate plans if we don't have one, getting one done. Some initial things to consider are if you aren't able to make decisions for yourself, and I think this is one of the biggest estate planning hurdles. You know, we're not just planning for death, we're also planning for disability. So if you aren't able to make decisions for yourself, who do you trust to make those decisions? Who do you trust to make healthcare decisions? Who do you trust to make financial decisions for you? So the first one is, if we're disabled, who do we want to make decisions? The second one is, after we pass, who do we want to be in charge of distributing our assets? Who do we want to be in charge of taking care of our minor children? Who do we want to be in charge of handling all of what goes into the estate planning process and sort of the administration of our estate? And then the last is just that, you know, as you're looking for an estate planner, talking with your existing trusted advisors, your accountants, your business advisor, your financial advisor, your insurance folks, get a good recommendation for an estate planner who has the expertise that you need for your specific circumstances, getting a good recommendation and finding somebody that you enjoy working with and that you trust.
Perfect. Thank you, Stephanie. Okay, we've got one here for Jennifer and Mark. What are you guys hearing from your industry sources in Washington about the PPP and the SBA loan forgiveness?
Oh, sorry.
I guess I can go on that one.
You go first, Mark.
Okay, I'll be quick. So in particular, we belong to an organization called the American Institute of Certified Public Accountants. It's a national organization. It's actually quite large and influential. They have a lot of connections at Washington, D.C. And probably the number one thing we're hearing from them right now is don't file for forgiveness at this point. Everything they hear coming from Washington is that there will be another bill, and that bill should make it easier to get your loan fully forgiven, and maybe even under a certain dollar amount, completely no effort on your part at all. It'll just be forgiven. All of the modifications that are being talked about apparently are to your benefit. So we're going to have to wait on successful legislation. And we all know the environment in Washington right now is negative at best. So their prediction, and I think probably anybody who recognizes the situation, we may have to wait till after the election for this particular piece of legislation to get passed. Now, it could go through the bill that's being bantered around between the parties right now. It could be in there. But it's just hard to say. In any case, here we are back to uncertainty. Our advice is go ahead and compute where you're at. Try and estimate either with your internal accountant or your external accountant what you expect in forgiveness, but don't apply. Sit on it for now. There's any deadline you might have is way off. So just be patient. Jennifer, I'm sure you have more comments than I do about that. So back to you.
Actually, you're right in line with the comments that I was going to make. Enterprise is really encouraging everybody just to sit tight. we have not started accepting our application for PPP forgiveness, and just kind of what Mark alluded to is it seems as though there's still a lot of changes happening within the SBA, and I would say try to prepare, but obviously I would just suggest to hang tight. And if you're an enterprise client, we will be sending you a personalized email when we will begin accepting applications, but that process has not started yet. So yep, pretty much echoing everything Mark had to add.
Awesome, thank you. Okay, let's see, we've got another one here. So this is for Keith. Keith, my 401k plan isn't really meeting my goals and objectives. How can I begin the process of redoing my plan?
Yeah, absolutely. So what I tell people is every year, towards the end of the year, you should do kind of just a cleanup of the plan. And one of the things, and it can be sort of a painful process, but you do have a plan document that basically outlines all the provisions of your plan. I think most people think that, well, a 401k plan is a 401k plan, but there's actually a great deal of flexibility as to how you structure your 401k plan. So it's a good opportunity to just sit down with your 401k advisor or somebody you trust, an accountant and somebody along those lines, and just go over the plan document kind of line by line. A lot of times they're 50, 60, 70 pages, but you go through it, and what you find in going through the plan document is that a lot of things you can change along the lines of eligibility and loans and, who's even available to enter the plan. So take the time to go through the process and make sure that the plan is still meeting your goals and objectives. If you're having the same problems year after year, maybe you take a harder look at those plan provisions and make sure that they still line up with what you want to accomplish with the plan. So flexibility on 401k plans.
Perfect, thank you. Jacob, we've got one here. So as a broker, what do you do to help your clients when it comes to forecast?
Well, the biggest piece on the forecasting is that sitting down with folks and actually being very transparent about where the marketplace is. One of the things that I feel that a lot of brokers don't do is come to you either at quarterly or at middle part of the year and sit down and say, hey, let's talk about where the marketplace has gone, either up or down, and why. And right now we are dealing, with the pandemic, we're dealing with wildfires, earthquakes, the 20th, I think, hurricane that just formed in the Atlantic that is coming up and going to hit Louisiana later this week. Yay. All of those pieces and also with the carriers are saying that their appetite for risk is getting smaller, which means for those out there, it means that it's going to get more expensive. So from personal to professional / business insurance, you're going to see anywhere approaching 10 to sometimes a 40 to 50% increase in coverages. And it's not because they just want to slap it down with you. It's the fact that carriers, for the most part, are really bad money managers. They don't know how to manage their money when they get the premium dollars from you. And so when they invested into the market, they invested into, I think probably, Keith, you probably talk about this a lot better than I can, but they invest primarily into things that have not a lot of high risk. And when there's a lot of risk out in the world, they have to then turn around and increase those premium dollars out to the general public for the insurance. And so it's really just a conversation about what's happening, why it's happening, how do we plan for it, and what defines success for the business. And that's a really important question, figuring out what success is, not my success, but really the customer's success. And the other piece that I wanted to actually talk about also is looking at your personal insurance, because I think that is also something in forecasting and talking about that. If there is a loss at home, where do you go to cover that loss? You go to your coverage for your home and auto. But if that coverage is not done the right way, you're going to take money out of your 401k, your investment retirement funds to help pay for that, or your business. And making sure that pieces are covered the right way is a huge, huge piece. So planning for that is massive.
Awesome. Thank you. Thanks, Jacob. Jennifer, let's see, this is for you. What financial tools do I need to plan for coming to the end of the year? Do you have any other advice for how to prepare for changes in the market?
Well, I do want to piggyback off of kind of what Jacob had said. And I mean, one of the things when we plan for worst case scenarios, it's really important to look at possible increases. And he just alluded to there might be an increase in risk, which would obviously tighten your margins even tighter as far as profitability. So I feel like that right there, as far as the news that he shared with us, is I hope more are listening and picking up on the facts that, you know, increases might be happening with risk coverage. So to prepare for that, it's really good to look at those different scenarios that Mark kind of talked about earlier today. And if you aren't prepared for that, to have the line of credit in place. So I just kind of wanted to reiterate what Jacob had said. It's kind of eye-opening because as margins are tighter, it's really important to be forward-thinking and prepare for that in case you cannot support, you know, that risk increase in your coverage. So as far as tools, as far as preparing, I think it's really important to renegotiate your contracts. Obviously, Jacob says that, you know, you do that in your health insurance, but do you do that with your vendors? Have you thought about different ways to enhance your cash position? And I feel like that's very important. And make sure you're not paying your bills before the due date, checking your, you know, your cash flow cycles and all of those inefficiencies that you might not have been able to identify, just really fine-tuning your whole financial cash flow plan.
Awesome. Thank you. Let's see. Let's go to another one over here. Hold on. Let me just check. Okay. So this is for Mark. I have no idea what my November, December profit and loss might look like, much less spring next year. How can I possibly develop a specific action to stay profitable or at least minimize losses early in 2021? And of course, how can I save tax? Oh,
There we go.
okay.
Got it. You know, I'll sound a little bit like a broken record here. Is you know, you need to get with your accountant and do that good, not so good, awful version, because the uncertainty this year end it's just all over. We deal with a number of different industries. We have noticed, and it's nothing new really, that some lead the economy, some are generally with the economy as a whole, and others tend to trail the economy. So as example, the construction industry tends to trail. They've been working off their backlogs, and now their backlogs are going down. Obviously, any kind of business-to-business service organization that requires an in-person transaction, they got hit immediately, and it's not going to let up. So their worst situation might look an awful lot different than a construction company, but nonetheless, we all have to go from where we're at, and it's just unpredictable. You know, for those of you who have the benefit of being a needed service, as a grocery store, for example, my guess is they haven't felt the effect of the COVID recession at all. But once again, you don't know. They may end up with some supply chain problems before you know it. So their problems will be different than your problems and my problems. But I really think just sit down with your financial professionals and say, you know, let's work up a good, better, best, or rather the other way around, a good, not so good, and awful version of where we might be. And, you know, if it was up to me, I would probably do no more than 6 months, because I don't think you have any possible vision past that. Clearly a virus, unblocked by any kind of antibody or whatever, will really wreak havoc on this economy well into next year. But then if we get a vaccine or an antivirus that's very, very effective, we may start recovering early next year. Who knows? But I think we can all agree that that's not going to happen in the next 3 months, or it's not likely. And, you know, it's just a tough situation. Trying to get out ahead of it is by far your best bet.
Perfect. Thanks, Mark. Okay, so let's see. We've got another one here for Stephanie. Stephanie, does it make sense to start doing some gifting now? What kind of gifting? Charitable gifting, and are there any possible changes in a state tax exemption as well?
So it's a great question, Marianne. As Mark pointed out, we really don't know what will happen in the election, and even if we get even if Biden is elected, we never know whether our politicians are going to keep their promises, so just don't know what's going to happen. However, I think it's very fair to say that right now we have the largest estate tax exemption that we have ever had, $11.58 million. And as these things typically go, pendulums swing back and forth. So regardless of what happens, at some point, that estate tax exemption is going to be less. And what the IRS has said is that if the estate tax exemption were to change, there will be no clawback. So if you take advantage of the huge estate tax exemption now and the gift tax exemption by gifting away money today, your current estate tax exemption will apply. So let's say you're a business owner with potentially a $30 or $40 million estate when you pass. You really want to work on gifting out some of that estate tax exemption now so that you take advantage of what is historically amazingly high. There's all kinds of complex ways to do this, and it's indicative of why it is so important to have a team of trusted advisors, because an estate planning attorney can start talking to you about the advantages of charitable gifting right now, about the advantages of gifting to an irrevocable trust and giving lifetime access to, say, a spouse, or that's called a SLAT, a spousal lifetime access trust, or to an IDIT, defective grantor trust. So all kinds of complex ways to take advantage of some of this, and just really so important to consult with your team of advisors and talk about what makes the most sense for you. But big changes potentially on the horizon, so time to do some planning now.
And could I jump in really quickly on the estate planning piece, in particular right now, because of the financial crisis that's happened in the country? It is now is probably the most interesting and probably the best time, because businesses' valuations have gone down significantly. It's all on paper. It's not, the business itself is not, the value in the business has not gone down, because we know that if we can do it the right way, we're going to rebound the right way. But if we can transfer those dollars down to the next generation, or those dollars to a different form of the state, passing it over an employee-owned stock plan, all of those issues get risk off the table for the estate later on down the road, 20 years from now. And that's a really important piece, because if you can figure out a way to use your dollars more effectively now and get the dollars out of your box, and let's do that. So good point, Stephanie. Very, very good point.
I've got a follow-on point to both Stephanie and Jacob. And by the way, I agree with both of what they said, but typically when I say this to, I'm going to call my younger clients, they tend to look at me and think, well, that's really your generation's problem, not like Jennifer or Mary Ann's generation's problem, right? Because, you're going to die soon or something, right? And you've accumulated a lot of, you're on Easy Street, whatever, right? Well, I can tell you probably my most successful client, he would tell you in a heartbeat he had wished he started his gifting sooner, because now he's got really like a giant whale of a problem. And had he started that, say, 15 years ago, he'd still have an issue, right, a problem, but it wouldn't be nearly as big. And keep in mind, and Stephanie can correct me if I'm terribly wrong, but when you die, once you go over that marker, whether it's 11.4 million or 22.8 million, you're going to get taxed at roughly 40%. So not only did the IRS clip you all along the way with income tax, that's not enough. They're going to grab another 40% over the hurdle of what's left. Whether it's fair or not, I don't know. It doesn't matter. But the fact is, as you grow older, God willing, and if you're blessed, your pile of assets gets larger, and it gets a lot more difficult to work with. I strongly recommend starting sooner than you think, as opposed to when you're in your 60s and 70s.
If it's all right, I'm going to jump in too and just say absolutely. So, Mark's so right. We think about, and Jacob's so right, we think about estate planning, succession planning, gifting as something we should do when we're older. But if you start as you're younger, you're really able to take advantage of some complex gifting or even some simple gifting that will make that estate tax that your heirs pay so much better. And 40%, whew, that is a lot of money. It makes a big difference.
We've been seeing an uptick too, and for business owners, we've been seeing a lot more folks decide to go the route for the or just basically presented is it's a way to sort of take your business, and obviously that's going to be a big day when you sell your business. But if you go the ESOP route, you can functionally sell your business over a period of years, so it helps from a tax perspective. And if one of your goals or your legacies in life is to kind of have your business, survive, well beyond you, it's a really easy to incentivize employees to keep them around and really to make sure that your business, sort of transcends your years of involvement. So we've been seeing a big uptick in ESOPs for those reasons.
Awesome. Thanks, guys. This is great. I love the flow here. Here's another question. Can we talk about the Secure Act, the CARES Act, the new stimulus, the election? What do you guys all have to say about that?
So the Secure Act from a 401k standpoint, obviously it had a ton of implications on all sorts of things, but just kind of pulling out the 401k piece, it moved RMDs back to 72. So that'll affect a lot of people, or maybe parents or grandparents, depending on where you are in your life. But historically and for a long time, 70.5 is now 72, the year you turn 72. And it did a couple other things to really increase 401k adoption. But one thing that it did we're really starting to see market is it sort of opened the rules for MEPs. And a MEP is basically a way to pull together a bunch of 401k plans, in theory, a bunch of 401k plans. And historically, there was a very narrow subset of people that could sponsor. Now they've opened it up to, basically thing with even loose. We have an association. They have, I think, 600 members, and basically now this association will have a 401k plan that the roofing contractors can then join. So if you think about roofing contractors, there's a lot of folks where it's them and maybe a couple guys in a truck, which is great. But historically, you haven't been able to offer things like health insurance and 401k. But if you're able to sort of, your association that you belong to sponsor the 401k plan, and you can just sort of snap onto it, it makes those a lot easier for those groups. So I think the MEPs are 401k plans down to smaller companies, and I think that's obviously a good thing.
I would add, and it's so important to think about what you can do with a 401k plan and with specifics. There's tons going on, but just as you look at all the changes that both the Secure Act, CARES, possibly new stimulus with an election on the horizon, my big takeaway from all that's going on is you need to talk to your advisor. Take the time to call your accountant, take the time to call your attorney, take the time to call your your banking advisor, your insurance advisor, whoever's administrating your plan, and talk to them about what kind of changes do I need to make now? What do I need to do today? What should I be looking at? Because there's been so much going on in the law, it's a huge opportunity to make some changes that will benefit you now and later.
Perfect. Thanks, guys. I think we might just go through, we've got about 7 minutes. Maybe everybody just give like a brief recap of what they feel like the most important thing is in your special area. And maybe we'll just start with Mark and then just go through everybody just make a couple of comments here. We don't have any more questions in the chat. So I think we'll just do that and then we'll wrap up. So Mark, you can go ahead and start.
Sure. In fact, I think what I'll talk about is something that hasn't come up, and it's really not my area, but I think it's a really good thing to bring to the front of your mind. And that is to amp up your cybersecurity. This is a persistent threat. Every year, these attacks get harder and harder to defend. That whole ransomware thing is very disruptive. It's very expensive. Given all the other things you have going on right now in 2020, with COVID and hurricanes, as was pointed out, what that's going to do to your insurance rates, changes in the law, the uncertain nature of our internal politics and some of our allies, et cetera, and so forth, and on and on. To the extent you can afford it, I strongly recommend you go out and get a thorough security check from a qualified cyber expert. This is not a do-it-yourself project. There's people in particular in the Far East that want to get involved. And just really quick, I've seen this happen to a client. They were attacked. The attack was latent, and that is to say it was actually on their computer for about 6 months, so that it went through all of their backups. And then, of course, they got the ransomware note. As soon as they said they were going to pay the ransomware note, all law enforcement abandoned them. FBI, whoever else was involved. They said, if you're going to pay that, we're done with you. And honestly, the guy had no choice. He's already out of business effectively for 3 days. He had to pay the ransomware and get completely new equipment and get new versions of all of his software and. Very expensive.
So,
you just don't need it right now. That would be my heads up.
So I'm going to jump in on Mark's piece. That, depending on how that's done the right way, is a coverage conversation with your trusted advisors and making sure you have a cyber policy that is put in place the right way. And right now, in the month of October, is Cyber Awareness Month. And we have a webinar coming up on the 8th in a couple of days. And 2 days. We'd love for you all to join as well. It's called A Tale of Two Breaches and what that looks like. And we're going to have we have a panel of experts from there, 2 folks from our company that are going to be on there, and then also some folks from cyber experts that can help you with setting up some of your internal programs. But more importantly is that during a review of those pieces. So love to sit down with whoever would like for us to do a cyber review. We're happy to do it. We have a team of experts. That's all they do is to do cyber reviews, and we're excited to work with you. I'm going to put in the link, the webinar as well. Thanks.
Jennifer, do you want to jump in, and then we'll go to Stephanie and Keith?
And I'm about cash is king. So I would just think through different incentive ways to hold on to your money longer. So if clients are paying you on time or they're paying you within that 30-day time frame, provide incentives to be able to keep those relationships strong and that your clients are paying you soon. Think through different options as far as remote deposit. We're talking about cybersecurity. It's really amazing when companies are able to utilize remote deposit or desktop scanners, because then the cash is accessible much quicker than having to, make a deposit and wait for the checks to then clear. When you're able to do that remote, and when we're in a virtual age, it makes a ton more sense. think about different options as far as audibles, as far as ACH, debits and credit options, so then you can make sure that your funds are secure with proper fraud protection, with positive pay, and I would say just think through different opportunities to keep your cash at hand, because cash is king. So finding different incentives to keep the cash in your account for a longer time frame. I said that earlier, don't pay your bills early, pay them on the due date, and you can do that through the ACH module. So just always have the cash in the forefront of your mind.
So as an estate planning attorney, my 2 cents is always get your estate plan done if you don't have it done. Get your powers of attorney done. And if you already have an estate plan in place, it needs to be reviewed. And I don't care if it's just a year old. We have had so many changes. It is time to call up your estate planning attorney and say, hey, what do we have going on? Are there some potential changes that I should make? So really just get that estate plan done, regardless of how old you are. And if you already have one, it's time to review it.
And for 401k, just to sort of echo off what Stephanie was saying, it's kind of the same thing. So much has changed. SECURE Act was really the most comprehensive legislative change we've seen in 401k plans for a very, very long time. So make sure that your plan is amended properly. A lot of these provisions do require amendments to your plan. So make sure that you've amended your plan and made it the plan you want it to be.
Perfect. Thank you, Keith. I just noticed, I don't know if you guys can hang in for one more second. We have one question in chat. We can answer it really quickly for Dr. Virlopati. Work from home has become normal in our business now. Even after COVID-19 is over, most of my employees will probably continue working from home. How can employees take care of their additional expenses incurred by employees like internet, electricity, coffee, snacks, furniture from home? I don't know, is that like a tax question? Mark, do you want to go for that real quick?
Well, that's a really good question. Obviously, for some of these directly related business expenses, you can reimburse your employees, with proper receipts and so on. Something like electricity, I think you're probably getting on the edge of, because it's really hard to bifurcate what was personal use and what was business use. Coffee, snacks, I don't think that's going to work, but who knows? Furniture at home, again, if they didn't have it and it is going to be your property, then the business owner can reimburse his employee for that. But again, title needs to remain with the employer. I think I'll bring up the coffee snacks with Jim Schmershel, see how that flies. But internet, probably. A lot of people are having to upgrade their internet to be on Zoom. And just the bandwidth requirements and the virtual private networks, which I hope everyone is installing for their employees. So, it's kind of a mixed bag. I would say bounce all of those off of your CPA, or be happy to look into any of them for all of you. But Congress, I don't think you're going to get Congress to look into that for quite some time. They seem to be more focused on getting reelected and such. So I don't think we're going to get any help from them in the near term.
I do agree. Okay, so I guess we're going to wrap up. We're at time, and because of my technical issues, we're a couple minutes late, so now we're running over a couple minutes, but I wanted to get all these questions answered for you guys. So I think our contact info is, there it is, popped up. So you can feel free to email anybody. Our email addresses are up there. Just take a screenshot and connect with all of us on LinkedIn. Thank you for the time today. We'd love to hear your feedback. If you guys could shoot us a message, LinkedIn, or just let us know how it went and what other topics you're interested in hearing about. We would love to hear that. We have a double header in 2 weeks. We've got 10-20, got sales enablement, and then a manufacturing panel and strategic planning. So come back and join us next week or 2 weeks out, double header, 10-20. Thanks, guys. See you soon.